Hello friends, we'll be discussing one simple illustration with you which is related to the bank reconciliation statement, mainly describing about what kind of problems do we have, how to tackle with these kind of problems. So now that you're really familiar about what bank reconciliation statement is, not exactly with the kind of problems though, but with the technicalities or rather the material aspect of it, you understand what are the causes of difference, you understand what is the method towards it, you understand why bank reconciliation statement is usually prepared. Now, with this illustration, we'll be able to understand how to go ahead with that problem and how to fix it. So that is the main concern of this illustration, why we are taking this illustration in the first place. With this problem, you'll be able to understand what is favorable balance, which book and which book has to be taken into consideration, like the passbook or the cash book, which is favorable or unfavorable though. What is the starting point? What are the additions and subtractions that you have to do? How is the closing point derived? How every bank reconciliation statement, or rather, how every adjustment is supposed to be dealt with, how it is supposed to be read, etc. etc. Once this illustration is solved, you will be further idea, or rather, you'll have further idea about what kind of different items you have in this specific chapter, which is related to causes of differences, because causes of differences is one of the major important reason which can probably track or give you a trick here, and it will make you go in a wrong direction if not interpreted in a correct way. So the first thing that you have to do is, whichever adjustment it is, read it in an appropriate manner, understand what it has been given, on which and which information has to be dealt with. So let's start with the illustration that we have right now, and then we'll go ahead with the problem solving format of it. So, this bank reconciliation statement is related to 31st of March 2070. The passbook of Namrata. Make sure what I'm talking about. The passbook of Namrata. That means the first book that they've given into the answer or into the question is the passbook. The passbook of Namrata showed a balance of 1,50,000. To her credit, that means passbook was correct. On the other hand, the cash book showed a balance of 1,12,050. Correct? This is what they've given. Now, passbook balance has been also given, cash book balance has been also given. I'll give you both the descriptions, which one to take first and which one to take last. And if this one is taken first, what is the outcome? If that one is taken first, what is the outcome? Everything will be shared with you. Let's start with it one by one. Now, let's go to the adjustments first. Now, the causes of differences as follows. They have been mentioned as follows. Namrata has issued checks amounting to rupees 80,000. That means she has given out checks to client worth rupees 80,000, out of which only 32,000 worth of check were presented for payment. That means, as I said in the earlier part, my balance is going down. 80,000 is already gone down. I am Namrata, my balance is already going down. But in my passbook, only 32 has been deducted because only those many clients came in and showed the presentment for check, and that has been taken off. Nothing else has been done here. So this is one of the difference. Now we'll deal with this kind of difference when we start with the problem approach. The second adjustment shows that Namrata, received 5,000 worth of check. That means a check which amounted to 5,000. I received it with me. I recorded that transaction in my cash book, but I never deposited that transaction. I recorded that transaction in my cash book. That means my cash book has an entry of it, but I never deposited that check into my bank account. So that's very clear. My cash book will show higher amount of deposits, but my passbook will show lower amount of deposits here because there will be no entry of this check here itself. So that is what you have to look after. Let's go on to the next one. The next one states as a check of 22,000 deposited by Namrata, that is me, hasn't been cleared yet. I deposited a check of 22,000 in my bank account. This is for 31st of March. Only for that month they are talking about. So it is possible that that check might have got cleared in the next month, in the month of April. So that refers to that in the month of March, it never got cleared. March is usually the end of financial year, hence we're talking about that month itself. So for that financial year, it never got cleared. It got cleared in the next few months, or rather in the next month itself. Hence, there is a difference here. There's one third party client now, Mr. G. He deposited 15,700 into my bank account. I'm Namrata. He deposited 15,700 into my bank account now, and that's what has been taken into consideration. So, if he has directly deposited it and Mr. G didn't even inform me. So, in this scenario, he has deposited 15,700 into my account. No intimation to me. Do you think I'll be updated with my cash book? Of course not. My cash book will show no evidence of this specific transaction. Only evidence will be in passbook. Now, the last transaction refers to the bank charges and bank interest. Now, bank says that they've credited an interest of 1,500 into my account. I'm Namrata. They've credited 1,500 into my account. I have no update about it because I haven't updated my passbook here. Apart from that, they charged me for 250 rupees. They charged me for 250 rupees of the bank charges. That means there were certain debit card charges, etc. It may be checkbook charges, debit card charges, anything that is related to it. It has been charged from my bank account. So one side they're crediting my account with 1,500 rupees. On the other side, 250 is being taken off from my account, and we have to give the necessary adjustments. Now, these are all the adjustments that are supposed to be dealt with. Here, what we'll be doing is that we'll be first taking favorable balance as per cash book as the starting point and then try to solve the sum. In the second half, we'll be taking favorable balance as per the cash book as the starting point and then try to solve the sum and figure out whether the items that are added in the first phase are the same things adding in the second phase or not. That means whatever items we're adding or subtracting when passbook is the starting point, are the same items being added or subtracted when cash book is the starting point or not is what we're going to check. So let's start with the passbook being the favorable point. So we've mentioned the details here, that is balance as per the passbook. The inner column of amount is only for additions or subtractions. The outer column is the final column that we'll be checking into. So the balance as per passbook has been given as 1,50,000. Now there are certain items that will be added. There are certain items that will be subtracted, and that's what we'll be taking care of. So we've mentioned addition and subtraction sign. We'll be adding items in that. We'll be subtracting items from it. So let's check whether the answer is the same as per the question that they've mentioned, that is cash book balance should be 1,12,050 is what the answer should be here. Now let's figure out is it the same or not. So to give you certain workings here, we'll be doing a small working here, cash book and passbook. Now, as the starting point is a favorable point as per passbook, that means passbook is correct, cash book is incorrect. So when the favorable point or the starting point is favorable, what is the first question that will come into the question, or rather what is the first question that you will first think of? Correct. Which is the entry, or rather which is the book where the second entry is supposed to be made, because the first effect is already done when it comes to passbook, or rather favorable point being given as the start point. So if the favorable point or rather favorable balance is the start point, the question should be where would the second effect be, and according to that the plus minus formula has to be applied. So let's start with the first entry. Now the first entry refers to Namrata issued checks amounting to 80,000. 32,000 were presented, balance were not presented. So basically we'll take the difference first, 80 minus 32. So that is 48,000. So checks worth rupees 48,000 were issued but not cleared or not presented for payment. So issued, the check has been issued. Which entry, or rather which book will this entry be first reflecting into? That's correct. It will be into cash book because you are issuing the check. So cash book is already done. So that means cash book entry has been already prepared. The only effect is supposed to be shown in the passbook. Now passbook is correct. That's the tick mark that we have given. Passbook is correct. Now, in such a scenario, when passbook is correct, let's figure out when the check is issued, will it be subtracting my bank balance or will it be adding my bank balance? That's correct. It will be subtracting. So if it is subtracting, if the passbook is correct, you will be subtracting that amount again. So we'll mention it on the subtraction side only with the difference of 48,000. So that has been mentioned. Now, the next transaction that refers to Namrata received a check of 5,000. She recorded that in the cash book but never deposited into bank. That means check she received, made an entry in the cash book, never went to the bank to deposit it. So in this case, it is very clear that the entry has been already made into the cash book. So the next entry that is supposed to be done is into the passbook itself. Now in this passbook, if the check is being deposited, that means check has to be deposited here, correct? So it is increasing the bank balance. So addition, if the passbook is correct, you will add that balance. So this is what we have done. Now let's go on to the third entry, which refers to a check deposited of rupees 22,000 hasn't been cleared yet. Again, from this line, it is very clear that the check has been deposited worth rupees 22,000. 22,000 worth of check has been already deposited into the bank account. That means it has been issued, it has been deposited. The cash book entry has been already done. Only the passbook entry is remaining. Now in passbook, you have to add it. The passbook is correct, so you add it again. Now, the next transaction refers to Mr. G, the third person who deposited 15,700 into my account. That is, I am Namrata. He deposited 15,700 into my account directly. Now, in which book will be the first entry made? Will it be the cash book or will it be the passbook? It's a third party direct deposit. That's correct. It will be into your passbook. That means the entry is done in a direct way. That means you are not aware about it. So the passbook has been already updated. So which book needs to be updated now? That is cash book. Now, as this is a deposit into your bank account, will your cash book be going up or will it be going down? Correct. It will be going up. So that means it is addition. Now, the cash book is incorrect because the favorable balance is as per the passbook. So if it is addition, if the cash book is incorrect, then you have to subtract it. Whenever it is incorrect, whatever things you have to do in the first place, do opposite of it. That is, if it is addition, incorrect, then subtraction. So let's put it on the subtraction side. Now, the last transaction that we have to deal with is where the bank gave us a credit of interest of 1500. This is one. The second part of is bank charges 250. So we'll deal with one by one. First, bank gave us a credit. Again, it's a third party transaction because bank is doing on its own. So whatever bank is doing on its own, 1500 is being directly credited into your bank account. So passbook entry is already done. You don't have to worry about it. The only thing is that it has to be updated in cash book. So if in cash book, if it is interest that is credited into your account, that means it is going to increase your bank balance. So it is addition. Again, cash book is related to a wrong book, so it will be subtraction here. Now, the second phase of it states that bank charges 250 rupees. So this 250 rupees, what you have to look after is something like this. So bank is reducing your bank balance by 250 rupees because these are the charges. So the entry has been already done in passbook. The next phase of entry needs to go in cash book. Now in cash book, whether this 250 charge is going to increase your bank passbook or rather your bank balance, no, it is going to decrease it. So if it is subtraction, if it is related to the wrong book, then you have to add it. So subtraction, wrong book related second entry, then you have to add it. Add this 250. So with this, all the items have been completed. Let's figure out how much is the total addition items, how much is the value of total subtraction items, and let's put it outside. Now let's take the value of all the addition items. So if you can see, we have mentioned two numbers in red, 27,250, which has to be added into the 1,50,000 opening balance. So that will give you 1,77,250. Out of that interim balance, now you have to subtract the items which are supposed to be minused. So that gives you 1,12,050. Now, this is the same answer that is given into your question that states the balance as per the cash book is 1,12,050. That means whatever you have done, addition, subtraction is absolutely correct. And that gives you the closure of this specific phase where passbook is the starting point. So balance as per cash book has been figured out. Now, what if we change or flip this question a little bit? We take cash book starting point and then passbook as the end point. Let's figure out what is the difference in there. Format remains the same. Let's figure out whether the addition items or subtraction items are the same or not. Now, in this format, what we'll be checking is that the opening balance or the favorable balance will be as per the cash book, and we'll see the difference when the closing balance is as per the passbook. So in this illustration, rather, we'll be using the same items, everything will be the same, only the virtue or perspective of looking towards this illustration will change a little bit. So the opening balance is as per the cash book now. That means cash book is correct, passbook is incorrect. So let's go with the first transaction itself. She had issued a check of rupees 80,000, out of which 32,000 were only cleared off. That means 48,000 were still pending. So the check has been issued. That means the check has been already given off from your cash book. So the entry of cash book is already done. Take that aside. The next entry will be in the passbook here. So when the passbook is supposed to be done, or rather the entry is supposed to be made into the passbook, is it going to subtract or is it going to be added into your bank balance? Because it is issue, that means it is going to subtract from your bank balance. So if it is subtraction, passbook is incorrect, will you be adding this or will you be subtracting this? Correct, you will be adding this, because if it is subtraction, it is related to incorrect book, then you have to add it. So check issued but not presented 48,000 has been mentioned. Let's go on to the next transaction. She received a check of rupees 5,000 was the question, or rather the adjustment, which she recorded into the cash book but never deposited into the bank. So if she's saying that she has already recorded into the cash book, then cash book goes out of the question. Now in passbook, do we have to add this or do we have to subtract this? It's a deposit, remember that. So it is going to increase your bank balance. That means addition side of passbook. So if it is addition side of passbook, it is related to a wrong book, you will be subtracting that much of amount. So that will be on the subtraction side now. Now, the next transaction refers to a check which was received by her, was deposited for 22,000 but was never cleared. It never got cleared here. So, check received, deposited but never got cleared. Now, the amount is 22,000. If the check has been received, deposited, that means the entry has been already done into the cash book. So, that is out of question. In passbook, it is supposed to be added because this is a deposit. So addition, if it is related to the wrong book, then it is supposed to be subtracted. So we'll mention that in the subtraction side. Now, the second last transaction that we'll be dealing with is Mr. G deposited 15,700. It's a direct deposit. So it is now related to passbook. So the first entry in passbook has been already done. You don't have to worry about it. The second entry is going to be in cash book. So in cash book, it's a direct deposit. So that means it is going to increase your bank balance. So addition in cash book is correct. So addition itself. Addition, correct book, addition. Then that's the format that you have to keep in mind. So this amount will go into the addition format. Now the last transaction refers to bank credited interest 1500 and bank charges 250. We'll take it one by one again. Now bank credited interest, again it's a kind of third party deposit here where bank itself is acting as a third party and depositing the interest in your account. So passbook entry is already done, need not worry about it. In cash book, will this be added or will this be subtracted? This will be added because it is a interest that is credited into your account, so it is increasing your bank balance or it is increasing your cash balance in your cash book. So addition here, and it is related to the correct book, so you will add that much of amount. On the other hand, bank charges of 250 are supposed to be mentioned here. Now bank charges, that refers to, it's a direct subtraction from your account. So passbook entry is already done. So in the cash book, it will be also subtracted because in the passbook it is subtracted. So in cash book also it will be subtracted. So subtraction, if it is related to the correct book, then subtraction. So this amount will be mentioned on the subtraction side. So with this, we have recorded all the transactions that are supposed to be added and subtracted. Let's take the total outside. So the opening balance is 1,12,050. You have to add 62,500 in it. So that gives you a total of 1,77,250, out of which you have to subtract 27,250. So that will give you a balance of 1,50,000 here, which is exactly the balance that is opening balance of passbook. So that marks the closure of the sum. The reason why both the phases were shown to you side, or rather to you guys, is because you will be able to understand if you're taking cash book as the opening balance or if you're taking passbook as the opening balance, things go a little different. It is changes, or there is a vice versa change in it. And according to that, you have to manipulate things. According to that, you have to add, subtract items. According to that, you have to think about which book entry will be first and which book entry will be last. So this is how the illustration of favorable balance is supposed to be solved. In the next video, in the upcoming videos, basically we'll understand more about these kind of problems. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.